The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 15th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, let's make sure we have an extraordinary weekend. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. What the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. Right now would not be too early at all. Let's go ahead, get the show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 24 points at 18,482. S&P off 6 at 2157. NASDAQ Composite down 12 points. She's trading at 5021. Russell 2000 slightly green. We'll call it flat. The DAX finished flat, off 1 point. The FTSE was really flat, up 14 points. Gold is trading back $2. We'll call that flat. Silver's off 12 pennies, trading at $20.19. Light sweet crude up 21 cents out here. There's not a lot of action Jackson out here, but we're going to go ahead and try to find something to take a look at. Leading the charge to the upside, dollar-wise, you've got Regeneron Pharmaceuticals up about $7, a little under 2%. Herbalife is up 11%, about $6.50. Biogen BIIB, that's up 2.5%. That's up $6. So you got the farmers to the upside. BioMarin, USANA Health Services, the IBB, is up $3. To the downside, Priceline is leading the charge off $18. Chipotle down 11. Intuitive Surgical off 6. Amazon down 6. Buffalo Wild Wings down about 5 points. So where do we begin? Let's begin with the key levels that we want to be paying attention to for the close today. So let's just go flip it over here, because there's really two price points that you and I want to be paying. Well, there's several, but there's at least two price points that we want to be paying attention to, and that's in the S&P 500 and the Dow. If you're watching us on Tiger TV, and my goodness, I hope you are, what you'll see on your screen, because it's easy to do, you just take your mobile device, you go over to the homepage of TFNN.com, you click in the upper right-hand corner, and voila, you'll be able to see these charts in HD. And the top portion of the chart you're looking at is the S&P 500. The bottom portion of the chart is the Dow. You'll see two yellow lines. Those two yellow lines representing the previous all-time highs from back in 2015. Inside the S&P, the number was 2134.72. We're trading at 2157, so we're trading about 23 points to the upside. As long as the S&P closes over 2134.72, we have an official breakout party that's going on. Inside of the Dow, the number is 18,351. We're trading at 18,484. That's about 130 points that it has to deal with over the course of the next 3 hours out here. As long as we see a close above that, it says we've got a breakout that is underway. Now, let's go from what the S&P and the Dow are doing. Let's go for the home gamers. Let's go take a look at what the ETF structures are doing. And the ETFs, we're just simply going to go take a look at, as soon as I can find it here. There we go, ETF panel for the weekly. So let's take a look at what then. In this case here, let's go ahead. We'll include the Qs, the NDX 100. We'll include the Russell 2000, the IW1. But first, we'll start with the SPYs out here. And what we're going to do is just get a volume metric. So last May 18th, the week of May 18th, what the SPYs did were 345 million shares. At 1:10 in the afternoon, we are at 404 2.4 million shares. So you've got a swing point that has been passed with conviction. That says this could be one heck of a real breakout inside of the SPY, inside of the S&P 500. The number inside the SPY you're going to watch for is 213.78. What happens if you close below that number at the end of the day? Anything is possible. Well, if you close below it, you were moving into a swing point with volume. It says the SPY will be back up there to test that level at least, which would be 213.78. This stage, you close above it, you've got a breakout with volume behind its move. Inside of the Dow Diamonds, let's go take a look at it. The Dow Diamonds number to pay attention to, 183.35. Now, the volume on its swing point from May of 2015 was about 15.8 million shares. We're at 13.6. So that says you've got to do about, 2 million shares, 2.2 million shares. Now, that's actually doable. If we take a look at what have we done so far volume-wise today, see if we can, for about half that volume. Inside the diamonds right now, 2.4 million shares. So you got 2.4 million shares. I'm going to switch back over to the weekly. And we're halfway through the trading session, right? 9:30, 10:30, 11:30, 12:30. We've got 3.5 hours. So, yeah, we're right into the middle of the session out here, so to speak, even less than that. And it says that, and I don't know if volume will keep up at this pace, probably not. But it does say that so let's go, as soon as I can find that chart again. Where did I put it? ETF weekly. There we go. So you've got the diamonds. It's going to be close, even if it's just close, quite frankly, to the 15.8 million shares. You can say, it's in essence overtaken a swing point, an important swing point with volume. So the number to be watching there, 183.35. Let's go see what the other indices or ETF indices are doing out here. Let's look at the Qs. The Qs, the number to be watching for today. What we can see here inside the Q chart is that prices run right into the resistance of its gap down. This is the gap down that took place on January the 4th, the week that began January 4th. So between the end of the year and where we're at right now. The level to be watching there, now the volume on that move to the downside, 262 million shares. We've only done 93 million shares to the upside. Doesn't matter. The number that you really want to be watching is the 111.51 area. You're at 111.74. Why do we want to watch that? Because 111.51, where we had the gap down, we're taking the low of the session from the week that ended the year. December 28th was the week that began that. And that's where the 111.51 is. That's where we have that open window. Just like if you were a kid and you threw a ball through a plate glass window or maybe a small little window out there and it busted, it's going to be resistance. That's what we're going to call resistance. You maybe have shards of glass. You put your hand in there, you can get all cut up. In this case here, that resistance line, 111.51, if you close above it, even with light volume out here, and really the swing point that it's actually going into from that week as 96 million, you're at 93. So you're going to be pushing into a swing. You got the gap down piece of it, and you're pushing into a swing. Well, it looks to me to be like with volume. So a close above 111.51, quite frankly, a close above 118.84 is what you would then next be looking at. Why? Because on a weekly basis, that is the low of its all-time swing point high from November in 2015. And that has volume of 158 million shares. It's pushing into it with light volume. Nonetheless, you close inside a swing point, volume or not, 111.84. Says you're going to go test the highs. That's really what we want to see with regard to the Qs and the NDX 100 in order for the breakout party to begin. Of course, it's already begun. You just needed an RSVP. This is Steve Rhodes with TFNN. I'm giving you an RSVP right now. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go ahead and finish off the ETF structures out here. So here's what we know. We know the S&P 500, the SPYs have taken out their all-time swing point high from a weekly perspective with volume. So the breakout is a real deal inside of the S&P 500. The Dow diamonds are going to be close, but very close. And so as long as they close above 183.35, says the breakout is real there. The Qs, the price points that we're watching are 111.51 and 111.84. The more bullish trade is a close above 111.84. It's still bullish if you close above 111.51. If you don't, it says that's a real resistance zone out here. And, you know, we're not talking about closing above it by 2 pennies out here or even 1 penny. But those are the numbers to be watching. But the Qs are struggling because they are a weighted ETF. What you and I know, because we looked under the covers, and what you and I know is it's not the big dogs, it's not the top 10 holdings that make up 49% that are moving the Qs out here. It is all of the little guys. It's the other 95 issues that have been moving higher with conviction. So the equal weighted ETF structure is saying you can pay attention to the QQQ if you want, but you might want to go look at QQEW, because that thing is moving and grooving. So the message there is actually bullish. Now, if we take a look at the Russell 2000, the case of the Russell 2000, it's running right into its most recent swing point, the week that began November 30th, 2015. That did volume of 152 million shares. Looks to me like we're going to be light. We're coming into that level with 132 million shares. The number to be watching, 120.07. If it closes, if and when, should it close above 120.07, then that's going to communicate to you that the IWM, the Russell 2000, is going to go ahead and make its way back to its highs out here from June of 2015, and that's in the 129.10 area. You know, it's not giving us that message yet, but close above 120.07 would go a long way to doing that. So those are the numbers to be watching inside of the market when it comes to the close out here. It'll provide us with a ton of information. Okay, had a question inside the den. Thank you, Danny, in Atlanta, hot Atlanta out there, asking if I could take a look at the U.S. dollar, Japanese yen. So we're going to look at this. I'm going to give you a treat. So if you're listening right now, I'm going to share with you a secret that is will absolutely, if you trade gold or the bonds, you're really trying to wrap your head around what are the markets trying to do out here. I'm going to give you what I believe is the actual secret key as we speak right now. And I'll show you how I arrived at that conclusion. But first, let's take a look at the Japanese yen versus the U.S. dollar. Trade out at 105.45. I think I have no, I don't have a delay on. Yeah, I've got a 15-minute delay. So depending on what system you're using, it could be slightly different. What this currency pair is doing, it's dealing with that June 24th day, that little Brexit day. If, in fact, we can see this clear, it's not going to do it today. I don't think it's going to do it today. But Sunday night, Monday morning, Tuesday, the level you're going to be watching is 106.84. You get above that level, and we might have a change in trend in this case here, with in fact the Japanese yen getting weaker against the U.S. dollar. Let's put this on a. Let me change this chart up here. Let's put this on a monthly. Oops, give me a minute here. Let's just change the time frame of this chart. Let's get rid of those boxes. Let's see. Let's put this on a monthly time frame. I might just give us a ton of data out here to take a look at. So as we take a look at the currency pair right now, let's just take a look at a couple different things. Let's look at retracement, see if we can figure anything out from the retracement levels. That's coming from the low back in October of 2011. Oh, I got expansions. Give me a moment here to actually put the right tool up on the screen. There we go. Oh, man. Let's see here. So there we go. Okay, so now we're going from the low up to the high in June 2015, and on a monthly basis, it really kind of mid-stroke. We're in between the 0.382. We're closer to 0.382 than we are the 0.618. But no real kind of reversal signal here on a monthly. Let me just change this over. Let's see what kind of weekly candle we have here. Now, the weekly candle, that tells us a different story, doesn't it? The weekly candle tells us that we have a nice old bullish engulfing candle. So it's strong. It's strong like bull. Let me go ahead and change this A to B equals CD. So after this thing had made it's now, let me go, where's the 1.618? The next one is going to be 2. We're putting in different, and then you're going to have 2.618. There we go. There we go. So what the Japanese yen actually did, it formed I will say that it's formed this week it has formed a Gartley buy pattern. What the heck does Stevie mean by that? Well, when you take a look at HM's work on page 222, what he shows there is he shows an A to B equals CD pattern, or what we now interpret as an A to B equals CD pattern. And the way that if any pattern, quite frankly, has completed, it's because the cavalry arrives. It's because there are Japanese candlesticks, apropos for us looking at the Japanese yen out here. That's going to be your message that a bottom or a top has formed out here. That's how the market speaks to us. So we know we've got the 1 to 2.618 A to B equals CD out here. We saw another A to B equals CD pattern that actually failed back the week that began February 22nd, because that was a nice little bullish engulfing, but nowhere near as strong as what we have for this week. See how this engulfed the prior session? It was a little bit of a key reversal day. It was back down here at the bottom of this hammer candle. That was really important, the hammer candle from August 24th out there. Once we went below that, the expression, if you're long, you're wrong out here. And we didn't get the next bullish reversal signal until right now, until this week. See, it's engulfing last week, the week before that out here. So that is a strong like bull message. What does that then say? That says that price ought to at least begin to retrace. Retrace to where? Well, we'll just simply, because of the A to B equals CD. Let me do this. Let me get rid of the other retracement that's out there. Remember, we use these as guidelines, just as you would in Pirates of the Caribbean. So where the Japanese yen ought to head to, Danny, it ought to continue to weaken, move its way up to 109.26. We know on the daily basis, got to clear a little bit of resistance. If it can do that, 109.26 would be the level. And then above that would be 115.59. Okay, so that's what the weekly chart shows us. We're not at the end of the month, right? So we're only halfway through, and so the monthly is not going to have as much meaning to you and I as this weekly chart does. So that's what we've got going. That's what I see going on inside of the Japanese yen. Now, that wasn't the secret. That was a lot of blabber, though, but it was important blabber for you to understand. Otherwise, I wouldn't have shared it with you. Now, what we want to go take a look at, we're going to flip the currency pair out here, and we're going to look at the at the we're going to go ahead and take a look at the yen futures contract out here. Now, what we're actually doing is we're going to take a look at three different things. This top portion of my chart. This is the 30-year Treasury. Now, I've got the continuous contract. That way, I've got all the data out here, okay? But this is really to show you what is really going on, and we're gonna identify who's the dog and who is the tail, who's the one that is making the calls, who is the quarterback in this market out here. So the top portion of my chart is the 30-year Treasury. The center portion of my chart is Goldilocks, and the bottom of my chart are the three little bears. No, that is the Japanese yen. We're using the futures contract. That way I have zero delay, and you're going to see the importance of that when we go shift down to a very shorter term chart to really answer the question. Now, what you can see here, you can see the synergy, for the most part, the correlation that exists between these three separate vehicles out here. And look at the day of June 24th out here. Just take a look at those candles. It's a beautiful thing. You want to talk about candles that basically look the same, just as many candles do. But you're going to notice there are times here where things get out of kilter. And we got to go back. We need to go see who is in charge, who's calling the shots. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We'll go back to unlock the key here. That was why I can keep you in suspense with regard to the 30-year Treasury, gold, and the Japanese yen. So we'll go back to that. But first, we're going to go out to California and speak with our man, Garo. Garo, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm very good. Thank you, sir. Thank you. I just turned the computer on now. I was at the pool. I was swimming. So I realized, wow, now it's time. It's 10:30. It's half an hour is passed from your program. Did you ever talk about Chipotle?
I have not talked about it yet. So tell us what we want to do here.
No, yesterday we talked about that 50-day moving average, that simple moving average. Yeah, 2 days it hit there, and he wouldn't cross that border, and then today it dropped, and then today it came with a very bad news that they're going to drop the target value to I don't know how much, and now it is below its 5-day moving average. I shorted in the morning at 6 o'clock, half an hour before opening the market, and still I have it. What is your opinion? You think it's going to go and hit that 435.59, or the trend is changed now?
So the good news. So let's say if it closes today below the price point is going to be 407.75. There was a brand new market profile that formed today. And this is the daily one that I'm giving to you. And if it closes below that, that would be a significant, a key level of support. And if it closes below 407.75, it says odds favor that it'll head down to about the 393 level. And that's the bottom of its weekly profile. If it closes back above 407.75, volume on the move down today so far has been 850,000 shares. It's nothing really substantial, nothing huge out here. But the price point that I would be watching is 407.75. You close below that, and that says that you've got, further downside action inside of Chipotle CMG. That's how I see it right now.
Yes, sir. Yes, sir. Very good. I wrote it down. I do appreciate it. Thank you, sir. Thank you, sir, so much.
You bet. And thanks for coming in from a swim. That sounds like something we ought to do, folks. Hey, Garo, you must be in great shape. You're out there. I tell you what, I was on vacation for a few days last week, and I went ahead and because I want to add swimming to my repertoire of workout exercises. I've been really focused on rowing, which is really great for my body. But to do some swimming in the ocean, I went ahead and I bought some earplugs. So, do you use earplugs or you don't need them?
No, I don't. I do scuba, and I do rowing. I do kayaking. I work out every day, hour and a half. I do weightlifting and so on. I'm in a pretty good shape, though. I'm 70 years old, but I'm in a good shape. Yeah.
I like it. You and Gary Player. Guys, you guys are our role model, my role model. So
Thank you,
I'll be catching up to you. But thanks for calling. Have a nice weekend. That was Garo in California, and he just gave you the secret of life, folks. It is definitely called exercise out there. So I am going to start. I tend to have problems with water somehow seeping into the eardrums and then creating problems. So went out and decided. Just happened to be in a store, and hey, there it is. The way the universe delivers to you. I said, "There's some earplugs." So I went ahead and bought them. So I'll go ahead and use them this weekend. In any event, okay, so now let's go back and take a look at Danny's key to the market, which is really understanding the correlation. Let's go see if it really has any value to us. The correlation between 30-year Treasury, gold, and the Japanese yen out here. Now, what we're going to do here is because when we take a look at this daily contract, we can see a pretty darn good correlation between these. And so the question becomes is who's the dog, who's the tail? Who is the one that is the quarterback? Because one of these is the one that is making the call. So how do we do that? The way that I like to do this is to go down into a shorter term chart out here. Now I'm going from candles to a line chart out here, and we've gone to real short term chart. We've gone to the 5-minute chart. So the top portion of my screen is the 30-year Treasury. Center portion again is the gold contract. Bottom is the Japanese yen. Now what I look for here are divergences between the currency pair, because we do believe that currencies rule the world, and these other two instruments. So take, for example, the left hand side of my screen out here, we can see that on a 5-minute basis back on July 12, we saw that the Japanese yen was making lower tops. This is the futures contract, okay? So we can see that it was making lower tops out here. What was gold doing? Gold was making higher highs. Well, who won the battle? Who was telling us the story of where the correction would come from? Well, take a look at it. Gold started moving lower. So that says, okay, chalk one up for the yen. Let's take a look at it again here. Between the time period of about July 13th all the way up until July 13th. So this is from about, 5-minute charts from about 12:40 in the afternoon until about 11 o'clock at night out here. We can see the yen was just making a double topping pattern, wasn't moving higher. But what was Goldilocks doing? Gold was moving higher. Who was the one that was really giving us a signal in the truth or dare or in the liar's poker? Okay, that's what I think of it. Who was really communicating to us? Who was the one in control? Clearly, it was the currency pair, because in the case of gold, what did gold do? Gold went ahead and sold off, got in line, all right? It was getting smacked around by the Japanese yen out here. Then what happens out here? Then we actually have the Japanese yen moving to a lower low. This is between about 2 in the morning on July 14th until about 6 in the morning. What was the 30-year Treasury doing? The 30-year Treasury during that same time period was moving to higher ground. And what did the 30-year Treasury eventually do? Went ahead and caught up to the direction of the Japanese yen. This currency pair rules right now, at least with regard to these instruments. And of course, how can you utilize that? Well, we're going to utilize this with regard to what gold is really doing out here, all right? Because Stevie's expecting Goldilocks to run lower through like October, so we're really watching the daily charts out here, and we're going to certainly be going ahead. We put the euro Japanese yen on the shelf. It just is not having the same kind of help to you and I. Eventually, maybe that will come back, but whether it does or doesn't matter. This currency pair, with regard to the 30-year Treasury, also is helpful. Why? Because of the correlation or inverse correlation between the stock market and the 30-year Treasury out here. So you can see there's another small time period here on July 14th where the 30-year Treasury was making higher high. The Japanese yen was saying not a chance. It was moving to downside targets. And what happened? 30-year Treasury followed along with it. We went ahead and saw gold here move to a lower low. This is into about, this is this morning at 12:30. Moves to a lower low. What was the yen doing? He drew the line just a tad wrong. It was making a double bottom out here. And so it was telling us what? It was telling us to anticipate that gold would go ahead and bounce. And that's, in fact, what it did. Again, it's a 5-minute chart out here. But for those of you that trade these vehicles, you've got to, you don't have to. I'd suggest that you go ahead and add this to your chart. And I will suggest to you that we've gone through here, and I can show you example after example after example that tells us who is the dog and who is the tail. And the dog out here, whatever kind of dog you like. Maybe it's a German Shepherd. Maybe it's a Schnauzer. I don't know. But this is the dog that you want to hunt with. And that's called the Japanese yen. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Since the week is coming to an end out here, and it's been a pretty key, pivotal week, let's just take a look at, don't pay attention to these market profiles on my screen as I pull up the indices out here, but let's just take a look at where we're at, take a look at a number of indices. This one that happens to be up on my screen right now, that's the Wilshire 5000, really Wilshire 3200 or 3600, how many of our stocks are still inside the indice out here. But nonetheless, you can see that this is a weekly chart, by the way, that we're looking at, that it is all the way back up to its highs out here. So these are the highs back in May of 2015. And as our man Z inside the Tiger's Den has shared with us, and so true out here, if you really want to understand the health of the U.S. stock market, this is the indice that you would take a look at. And so if we take a look at this indice, the actual high, so I can give that to you, and that's going to really be your resistance point out here, is priced out at 22,522. Near 22,371. So far, the high this week has been 22,463. So the health of the stock market, don't let anybody tell you any differently. I can't, you can get into the fundamentals, how we got here, the Fed, the this, the that, or what have you. I promise you that years from now, when we're looking back at charts and we're trying to identify as levels of support and resistance and this and that, we're not going to remember any of that stuff. We're just simply going to be paying attention to the technical patterns inside the charts out here. And the Wilshire 5000 is saying some mighty fine things about the health of the stock market out here. So don't fight the tape. Talk about don't fighting the tape. Let's go to Robert in Chicago. Robert, thanks for calling. Thanks for holding. I don't even know what that meant, but it just kind of flew out there. You'd like to take a look at NTDOY? Tell us what you're looking at and what that is.
Oh, NTDOY. It's the play, I think, on Pokemon, this Pokemon Go. And Steve,
okay.
By the way, thanks for getting me into a Procter and Gamble. So you have to draw the line, and you helped me draw the line to get, add to my position there. So thanks.
Oh, great. Glad to have helped out here. Now in this equity, This must be the obviously the Japanese version, the Japanese exchange. We would really see what's going on here. So we must be dealing with currency type conversions, all that stuff, because there's no real volume inside of this. 80,000.
Oh, I'm sorry. If there's a better ticker, like if you look at Toyota Motor, they have TM, and
no, that's okay. No, that's okay. No. We'll stick with this. No. We're cool. We're very cool. So on this, what is it that you're looking at? What a nice move this thing has had, huh? Over just the past week, from what, $18 to 32. Have you ever played Pokemon?
No, I have absolutely no interest in this. But when I look out in the park and I see all these people walking around, looking at their phones, going somewhere, to me it's a disruptor. Something's going on here that tells me it could be used as a marketing tool, a way for brick and mortar to challenge the Amazons of the world, get people in their stores.
Well, that would be interesting. If we but so
I
that's
have no
cool.
view. This is not a style of. This is not my style to buy such a high flying stock. But if there is a play here, I would like your view.
Well, if we take a look at the actual chart, and I put it on a monthly chart out here just to kind of give us some perspective as to what it's doing. The first tool that I would just simply put up is try to understand its retracement from back in October of 2007, from the highs out here down to the low in February of 2013. And I would say, just looking at this chart, number one, this is a wide-ranging bar. No question. This week here has been, as you were saying, game changer. And when we take a look at the stock chart, both volume-wise, even in the U.S., and this has been a game changer. Now, where is that game changer going to take price out here? Probably going to take it, Robert, up to $37 is going to be the first move. That's nothing more than a dead cat bounce, a 0.382 retracement. The next move is going to be probably up to the $45 area. That's where it'll probably give us some type of feel as to whether or not it's real. The reason I say that is that's where we've really got our last set of swing points, was back in April of 2010. Has it changed its trend? Yeah, it changed its trend a long time ago if we just use a trend line, a white trend line, and then it just simply consolidated for several months out here. So the change in trend actually took place, it looks like, back in November 2014. But it really didn't do a whole lot until, they came out with this new game out here. So, how you use it or how you want to trade it, I don't know. I'd say you're probably better off trading it on getting access to the Japanese stock exchange and trading it there versus here in the U.S. But that's just my take.
And so, Steve, you're typically not buying a Honda Motor HMC or a TM. Do you ever play those, or do you not buy international stocks?
No, there's no problem with international stocks. In fact, when Tom and I used to do the show together, when I was over in Clearwater, we had talked about, what we picked up on was that the Japanese yen, that the real trade out there was utilizing Japanese currency to buy assets, hard assets, or any assets out here, because it looked like it was going to turn. And so in this case, and it has, and it looks like, when we took a look at the Japanese yen earlier, it looks like the retracement of its huge move to the of its huge strengthening, its retracement, looks like that's over based on this week's information that we have out here. So that would say that the Nikkei, ought to take off topside. As long as that trend continues out here. So no, I'm not. It's just when we looked at the stocks themselves individually, like Toyota Motor, TM. If I put this on the daily chart out here, it's just with all the gaps and things of that sort, it's just not as useful to you and I to understand what the stock chart is doing. Like, I would put up market profiles on this, but I don't know how accurate they're going to be because it's void of a lot of pricing information, as an example. And I would say if you're going to really trade this, and it's going to be a significant part of your portfolio, then pay the fee to get access to the exchange where it's really traded on to give yourself better information. That's really my. It's kind of like if you're going to trade the TBT for bonds, you really should be paying attention to what's going on with regard to the notes out there and the bond. You should really be aware of what's going on in interest rates. You should really wrap your head around that, because that's the underlying instrument. If you're going to trade GLD, you really have to understand the patterns that are going on with the gold contract. You don't have to, trade the gold contract, but because it trades, in this case here, those instruments specifically, because they're trading in essence 24 hours a day, there's information that is going to be useful to patterns that you and I take a look at to help us identify where price is headed to or the next move is at.
All right, I understand. If I got a pullback in NTDOY, is there an entry point that you would consider?
So, the ultimate entry point is that it comes back to its breakout level. That seems pretty unrealistic because the breakout level is going to be back at around the $20 price point. So if this is really a change in trend, that would be the ultimate. If this were to pull back, some of the exhaustion of this thing is going, where are you going to look for possible entry points? The truth is, I'd have to say it's between about $26.25 and $30, somewhere right around there, $30.25. That's with the information that we have available to us. That's the price area where I would take a look at it. All right, Robert?
That's perfect, Steve. Thanks very much for your analysis.
Hey, my pleasure. And have a nice weekend, and thanks for calling. That was Robert in Chi-Town. This is Steve Rhodes in Florida, and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 4, S&P is off 4, Composite is off about 8 points, Russell's up 1, and so we've got a very flat market out here. Maybe it's not going to be so flat as soon as I get off the air and we see the market cream to the downside or the upside. I've got small signals, very small signals that suggest that there is a topping-ish type pattern that is playing out as we speak, but the market's been able to get no momentum to the downside, at least not as of 1:54 in the afternoon. Maybe it starts, maybe we get a decent retracement, that begins sometime next week. If it really is going to begin, it's probably not to the end of the week out there, but we'll see. So what do we know now? Well, I tell you what, we know that bonds are moving lower. That's clear. We know that if we take a look at that correlation with the yen, if we have interpreted the yen chart properly, that says that bonds are going to continue moving much, much lower. Now, the first place for us to take a look at where bonds may stop is at the 171.09 level. This happens to be a 5-hour chart for the September contract, and that's where we'll get to an A to B equals CD to the downside. Now, there was a pretty shallow retracement here. You're going to see that B to C leg retracement. That actually says to me, probably not going to stop at 171.09, probably going to head to the 169, 168, 54-ish area out here. But we're just simply, the cool thing is that we'll know because the market can't hide itself from us. You're going to see a bullish reversal signal when it does bottom. And it's very possible here that what we're going to see, what is playing out, this is just a 5-hour chart, but what's playing out is this is setting up a Gartley buy pattern. If we see the bulls come in anywhere between where we're trading now and any one of these A to B, CD extension levels, then that would qualify as a Gartley buy pattern. Now that Gartley buy pattern may just be some retracement of the A to D leg out here. I don't know. I can definitely make the case that this month right now in July the bond 30-year is topping. What was interesting yesterday afternoon, I was with some key wealth managers at one of the big outfits that you know of, and I had seen some materials that they had where they were suggesting they were rebalancing portfolios for clients and having them increase their exposure to bonds. And so I said, really? I mean, that's what you guys are really, really thinking and really doing out here. You're going to totally increase their exposure, knowing that at some point in time this is going to come home to roost. I recognize the German bond, went out at negative yields, and the Swiss, had a bond with a duration of like 40 some odd years now at 0.02%. But that is just simply, insanity. Actually, so what was really interesting about the conversation, I said, no, this is a short-term play. That's all they were thinking was a short-term play. I actually gained a little bit more respect for them because I was like, wow. So it is going to be interesting to see how this whole thing really ends up playing out here. But it's interesting. Like, I can tell you that historically, the correlation in the direction of bonds and the stock market, historically, go back to 1977, it's 52%. They correlate 52% of the time. It's like a coin flip out here. However, as of late, that correlation is substantial enough to know the inverse relationship. And therefore, if the yen is really going to start making its move, and that is really the dog that is going to then start moving bonds to the downside, which would also start moving gold to the downside out here, it's going to be an interesting summer. And it's really just begun out here. But we're going to continue our summertime fun by going to our polar bear. So he's going to cool you down. Stay tuned for David White. And then we've got the Tom O'Brien Show from 3 to 5. Have a safe weekend, a happy weekend. And we'll see you on marvelous, magical Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.